Welcome to Pi Day, March 14th, 2014. Scott Riley with the Market Update Desk, powered by Mortgage One. Actually, sporting one of my favorite t-shirts, a baseball fanatic. Life's too short to take a fastball down the middle. Yes, high school baseball started this week, so my passion, coaching and baseball, it's a hidden center stage. Today we had producer price index, we had retail sales, we had jobless claims, and we took two, not one black eye, but two black eyes kind of today in the market. It is a very red day, not a green day, and we don't like red days in the market. What happened? Let's kind of break it down for you with everything that's going on. Producer price index. This measures wholesale price inflation. The expected was to be the headline to be up 0.2%. It was more than double that at 0.6% month over month. Huge disappointment in that number. Year over year, we grew to 1.6%, which is fairly benign, but it is an upward trend, not a downward trend. Core, which strips out the volatile food and energy, was up 0.4, which was in line with the expectations. So that is now year over year up 2%. Energy was the big culprit in this report, specifically WTI crude oil, which is now up and over $80 a barrel. And there's some projected continuation of Saudi oil cuts going on with the OPEC plus nation. So there's a lot to be told on the energy front right now. Retail sales. Now, we would have been even worse in the bond market and mortgage-backed securities today if it was not for retail sales. So we actually gained a little bit from that aspect. Retail sales showed an increase of 0.6%. Now that was versus estimates of 0.8%. That wasn't the whole story. There was a revision downward to February's retail sales of 1.1%. So that was a big negative for retail sales with a big miss, which helped bond market, but not nearly enough to offset the second month in a row of hotter than expected inflation. Now, the concern as we go forward into next week and, really over the next 4 weeks probably, is these numbers, both consumer price index and producer price index, a lot of that data rolls into personal consumption expenditure, or PCE. That's going to come out later this month, and that is the Fed's favorite measure of inflation. So we do have some concern on where this PCE number is going to come in. What this has done now is taken the betting market for rate cuts, and we're all the way out to the June meeting now for an estimation of a 52% chance of rate cut in June. So March is off the table at the next meeting. May's off the table realistically. And now we got a question if June is going to be on the table for rate cuts. So we could be looking at a July and August for rate cuts, but then we're smack dab in the middle of election season. So there's a lot that the markets are very concerned about, and the lack of roadmap from the Fed is giving even more concern about where it's going to go, where the market's going to go, and what the effects are going to be. Now, the other aspect that happened today was jobless claims. Initial claims were down 1,000, so basically flat. And continuing claims grew 17,000 and are now at 1.8 million. Here's the big one. There was a monster revision downward, or fewer continuing claims is what the BLS is saying, for February by 112,000. We're seeing these huge revisions, whether it be for jobs created, continuing claims, and we're even seeing revisions actually within PPI. There was a revision downward last month, upward of 0.1%. So all these revisions are spooking to an extent the market, because it seems like we can't rely on the data that were being presented by BLS. So we've got a ways to go to create clarity, consistency that the market can see. So that's where we are right now, heading into tomorrow. I expect the market's going to still be a little bit spooked tomorrow because we're heading into Friday. Maybe next week we can claw back some of these losses, but we took it on the chin today. We will keep you updated. The market's still scorching hot for buyers. Lots of buyers out there. If you're waiting, don't wait anymore. every day or week that you week is costing you money with the price of homes increasing and the competition exponentially increasing. Give us a call. We'll put our knowledge and wisdom and experience to work for you. Scott at the Market Update, your local, original, singular source for market news. Thanks so much. 616-293-2189. Bye-bye.